So in this section, we're going to be looking at the alternatives that are set out in the consultation paper. But before I move on to those, I want to briefly talk you through the hybrid model for the development of the guidance that's set out in part 1 of the consultation paper. Some of you may have seen this before if you came to any of the part 1 outreach events. But it's proposed that the model uses existing international frameworks with support from national frameworks as part of the model for the guidance. And in this model, IFRS for SMEs is proposed to be the foundational international framework. And that's because IFRS for SMEs is a single standalone set of guidance. And that guidance is periodically rather than continuously updated. So it provides a relatively stable base for the guidance and is not updated, every year. But IFRS for SMEs, with its focus on private sector transactions, albeit a wide range of private sector organisations, doesn't address NPO specific issues. So we're proposing that the full suite of IFRS standards and the full suite of IPSAS standards and their conceptual frameworks would also be used where IFRS for SMEs doesn't address an NPO specific issues. We're also proposing in the model that we draw on jurisdictional level guidance that has been developed for non-profit organisations and has specific reporting solutions within it. A number of countries do have specific guidance for non-profit organisations, and they have some well thought through approaches to dealing with specific transactions. But from the work we've done, we've seen that depending on the country context, this can lead to different solution, meaning there's no one single national based solution that we could take forward. But adopting this combined approach will mean that we can access the most appropriate elements of existing guidance without starting from scratch. And the alternatives that we're about to discuss sort of in some places draw on this model, in other cases it doesn't, because we're seeking feedback on the model as part of the consultation. This was in part 1 of the consultation that formally closed on the 30th of July, but we have extended the deadline to Friday of this week. So if you do have any thoughts on that, you haven't lost your opportunity to make a comment. So just talk about current international guidance on the presentation of financial statements. This can be found predominantly in within the IFRS suite of statements in IAS 1 on the presentation of financial statements, and in IAS 7 statement of cash flows. In IFRS for SMEs, it can be found in sections 3 to 8 of the standard. And in the IPSAS suite of standards, it can be found in IPSAS 1, presentation of financial statements, and IPSAS 2, cash flow statements. So that's the primary source of existing international standards. But there are presentation issues included in other standards. So that's not exhaustive, but it provides a bit of a baseline. Under IFRS standards, a complete set of financial statements includes a statement of financial position, an income statement, either a statement of comprehensive income, a separate income statement, and comprehensive, or you can separate the two. Statements of changes in equity is also a primary statement, and a statement of cash flows, as well as notes to the financial statements. Under IFRS standards, the statement of cash flows may be presented using what's called the direct method or the indirect method. The IASB has issued an exposure draft which proposes amendments to the format and content of financial statements, and that's happened relatively recently. The requirements in the IFRS for SME standards are identical to the main IFRS suite, but I should mention that the International Accounting Standards Board has initiated a programme to review the IFRS for SME standard, and in particular to consider updates for IFRS standards that have been issued since the last update. So just making sure you're aware of that. Ipsos uses some different terminology. Interesting, we're just talking about terminology, but otherwise it has similar requirements. A key difference between IFRS and Ipsos is that the income statement, known as the Statement of Financial Performance in Ipsos, does not include other comprehensive income. Instead, Ipsos 21 presents gains and losses in other comprehensive income. It presents gains and losses that in IFRS is in other comprehensive income in the statement of changes in net assets and equity. So it is there, but it's presented in a different place. IFRS standards, the IFRS for SME standard and Ipsos include guidance on the format of each statement, such as the material categories of assets and liabilities to be reported. They also include further guidance on topics such as comparative information, materiality, and the aggregation or disaggregation of information. These standards provide the breakdown into material categories that should provide such information. It provides that there should be a breakdown that gives information to stakeholders that enables them to get a full picture of an entity's financial position and performance. All of these standards have examples that present the statement of financial position or balance sheet using a vertical presentation. We're just referring to that. However, the standards do not prohibit a horizontal presentation with assets presented alongside liabilities and net assets. International standards do not include guidance on fund accounting, which we've just been talking about, the presentation of fund or reserve balances, or disclosure of fund or project statements, which could be important to non-profits, as we've just been discussing. And while the international standards do not prohibit additional information or subtotals being included on the face of the financial statements, no guidance is provided. Each preparer currently needs to use their own judgment in determining an appropriate format for each financial statement. In national standards, we looked at 3 jurisdictions that, they actually are all based variously on the different international frameworks, one on IFRS, one on IFRS for SMEs, and one on IPSAS. These jurisdictions have some modifications for non-profit organisations, including in some jurisdictions reduced disclosure requirements. They also provide some additional guidance on the issues we've discussed, but not everything is addressed. So there's kind of a range of things in there. I'm not going to cover all of the different approaches, but just for as an example, in one jurisdiction, NPOs are required to use fund accounting in their financial statements, aggregated into 3 classes: unrestricted funds, restricted income funds, and restricted endowment funds. And it requires a sort of a column approach that shows revenue and expenses for each of those funds, and requires a disclosure of the transfers between funds. In another jurisdiction, there is a requirement for 2 classes, just restricted and unrestricted. And in a third, it permits but doesn't require the use of fund accounting in the presentation of financial statements. So there are some differences there in approach. And in fact, one jurisdiction also permits a deferral method of accounting for restricted contributions as well. In a jurisdictions whose standards are based on IPSAS, it provides simplified requirements for smaller NPOs. And these requirements provide guidance on the difference between restricted and unrestricted funds. All of the alternatives that I'm going to come to now take the minimum requirements of international standards as the start point. They permit flexibility in the presentation of the financial statements, vertical versus horizontal, for example. And this flexibility is retained in all of the alternatives. So none of the alternatives prescribe a format. The various approaches in national guidance have also informed the development of these alternatives as well. And all of the alternatives include disclosure of an entity's policy for the management of reserves on the basis that this could improve transparency. So let me take you through these. So alternative 1 is to follow the requirements of the international standards, any of the suites unchanged, but to provide additional NPO specific guidance, particularly and also particularly around the provision of additional information to meet stakeholder needs. The guidance would provide example of optional extensions to presentation requirements, including the presentation of restricted funds, use of fund accounting, and use of supplementary fund and project statements. It would also, as I said earlier, recommend a disclosure around reserves. Consistent with the guidance model that I just talked about, we probably would have a preference for IFRS for SMEs, but this alternative could take any of those forward. Alternative 2 is built specifically on IFRS for SMEs and draws on guidance from national standards, specifically the use of fund accounting. The use of fund accounting would require as a minimum that income is split between restricted and unrestricted income on the face of the income statement. And this alternative could mean that additional disclosure on the face of the statement of financial position or in the notes to the financial statements. Additional NPO specific guidance on extending fund accounting to other statements and additional fund reserves will be provided, along with NPO specific guidance on the use of supplementary fund or project statements, as in alternative 1. Slightly differently to alternative 1, it would require rather than recommend the disclosure of policies regarding the management of reserves. Alternative 3, this builds on alternative 2 and adds a new requirement to provide supplementary donor or project statements for material funds or projects. This supplementary information could be part of the financial statements or form part of the notes to the accounts, and could be on a cash or an accrual basis. Including this kind of statement goes beyond existing requirements globally, but might have the potential to meet the reporting needs of major donors. So in this alternative, there is a requirement to report restricted funds separately from unrestricted funds as a minimum, same as alternative 2. It also has a requirement to use fund accounting for the income statement for fund reserve balances. As with alternative 2, additional NPO specific guidance on extending fund accounting to other statements and additional funds and reserves will be provided. Also consistent with alternative 2, there is a requirement to disclose reserves policy. The key difference in this alternative is the requirement to prepare supplementary fund or project statements for material funds and projects. More guidance is proposed on all of these alternatives for the presentation of net assets. The presentation approach chosen will depend, at least in part, on how restricted contributions are recognised. The recognition alternatives are discussed in issue paper 3 on non-exchange revenue. That was the first webinar in this series that we carried out, and if you want more information on that, you can either look to the IF4NPO website that has both the topic paper and a recording of the webinar. I kind of, just before I move on, is, it's important to remember that it is the general needs of stakeholders that underpins the work of international standard setters in the private and public sectors, and the information provided in the financial statements. We need to kind of keep here the focus on the general information needs of stakeholders. So I just kind of want to leave that thought. In terms of helping to understand the implication of these alternatives, the consultation paper looks at relative advantages and disadvantages through 4 perspectives: technical, practical, stakeholder, and cost benefit. And the advantages and disadvantages are not exhaustive, but they give you some idea about the differences between the options. In looking at the relative advantages of the alternatives from a technical perspective, Alternative 1 retains the existing presentation of financial statements and is compliant with their requirements. However, accounting for each fund separately could lead to improvements in financial management under Alternatives 2 and 3 and could be an advantage there. Practically, specific guidance to assist non-profit organisations in their potentially complex arrangements and to address materiality and cost benefit could be a benefit for all of the alternatives. From a stakeholder perspective, Alternative 1 has the advantage that it allows NPOs to use only those options that are relevant to their stakeholders and provides transparency of earmarked reserves where the recommendations are adopted. Under Alternative 2, the presentation of restricted funds separately from unrestricted funds can increase transparency of available funds. It would also provide transparency of earmarked reserves and improved consistency of presentation. In addition to those advantages, Alternative 3 would also provide greater transparency over material funds or projects. Additionally, for Alternative 3, from a cost benefit perspective, the presentation of supplementary funds or project statements might reduce the need for special purpose financial reports, and that would need to be an important consideration if that alternative is progressed. Looking at the disadvantages, from a practical perspective, under Alternative 1, non-profit organisations may lack the information or expertise required to determine which options under standards and guidance are required to meet their needs of their stakeholders, particularly for smaller organisations. Alternatives 2 and 3 have the disadvantage that additional records might need to be kept. And in addition, under Alternative 3, it may be difficult to agree a single format for the supplementary statement that will be granular enough to meet the needs of all donors. So that's an important consideration. From a stakeholder perspective, Alternative 1 may result in less consistency as different NPOs may present varying levels of detail in the financial statements. Alternatives 1 and 2 might not meet the reporting needs of major donors. That might still be an issue. And for Alternative 3, the additional requirements may lead to increased length and complexity of the financial statements, and the presentation of different perspectives in the core statements and supplementary statements might be confusing for stakeholders, actually having the converse effect of making them less relevant. From a cost benefit perspective, the cost of introducing fund accounting under Alternatives 2 and 3 could exceed the benefits, particularly for smaller NPOs, as a consequence of additional analysis that's needed. The same may be true for the cost of introducing the supplementary statement for Alternative 3. For both Alternatives 2 and 3, the cost of preparing and auditing financial statements might increase. So that's just to give you a flavour of some of the factors that are relevant to the alternatives to kind of reflect on. We conclude this particular topic in the consultation paper by asking a list of questions. The first 4 of those questions are standard to all of the topics, and they go to have we got a good understanding of the issue? Have we got it right? Have we got the understanding right? And the remaining questions are about the alternatives that have been presented and seeking your views on that. And the feedback on this will help us as we develop the guidance. For this particular topic, we also have an additional question about terminology. It's interesting that's come up again, about the term statement of financial performance. And we're kind of interested in whether you have got some views about that term and any unintended consequences that might arise from that. So that's taking you through the alternatives that are in the consultation paper.